In 2030, how much Ethereum would it take to retire? Let's have a look at it in more detail. Hey guys, this is Clever Money, and on this channel, we love talking about all things money as well as ways to make money online wisely. Before we can figure out how many ETH you'd need to retire in 2030, we need to have a rough sense of how much it would cost. Because you can probably retire in most countries across the world if you can afford to retire in the US. I am going to make all of these calculations in US dollars and use US data. It is also worth noting that I'm not implying that anyone should try to retire only on Ethereum investments and that diversification is crucial in retirement. However, this is just a thought experiment, and I am curious to see how much ETH it would require in theory. Before we start, don't forget to subscribe to our channel and make sure to turn our notifications on so you can get notified every time we upload new videos. Without further ado, let us begin. According to statistics, the average household spending each month in the United States is roughly $5,000 per home, with an average of 2.5 individuals in that household. But we can't just apply that figure to 2030 because there will be some inflation between now and when we wish to retire. Inflation in the United States reached 7% in the third quarter, but it has usually been closer to 2 or 3%. So if we assume a modest increase in inflation between now and 2030, assuming that the FED will be able to get things under control sometime in the next couple of years, we can project a 4% annual inflation rate over the following 8 years. According to this, the typical household expenditure in 2030 would be $6,800 per month or $81,600 per year on an annualized basis. Now I'm attempting to make a cautious estimate of how much it would take to retire so that when we try to figure out how much ETH it would take, we have a bit of margin error. I believe it is definitely possible to live on less, especially if your household is smaller than the average of 2.5 people. But even if you have that many people in your household, I believe that if you're a little bit frugal, you could certainly survive on less than $5,000 per month in today's dollars or $6,800 per month in 2030. So while the average length of retirement in the United States is only 18 years, I believe we all want to retire a little earlier and enjoy the fruits of our efforts. So let us say we are going to be retired for 30 years. That means we need to cover 30 years' worth of expenses, which at the 2030 rate of $81,600 per year comes to a grand total of $2,448,000. Now, bear with me since we are almost done with this and can move on to how many ETH it would take to retire. But before we can do so, we need to know what the Ethereum investment's everlasting growth rate will be because we obviously hope that the value of our investment would continue to rise after 2030. Currently, the average S&P 500 inflation-adjusted ROI is roughly 8.29%. When I say inflation-adjusted, I mean that the actual return on investment has been higher, but after subtracting the average amount of inflation, the real dollar amount remains the same. To be prudent, let us estimate a modest increase in long-term inflation and pencil in a 7% permanent growth rate for Ethereum beyond 2030. When we crunch all of these data, we can see that we need to have $1 million invested by 2030 if we want to retire such that we can spend that amount over the next 30 years. Here is a simple way to see this with this retirement calculator, and I will explain why this is a relatively conservative estimate of how much money you'd need to live in retirement. As you can see, if we start with $1.1 million and withdraw $6,800 per month for 30 years at a rate of 7% per year, we will have a total of $1.1 million. If these figures are true, not only will someone be able to afford their bills for the next 30 years, but there will also be about $400,000 left over at the end. Thus, you can see how starting with $1 million instead of $1.1 million would make a major difference because the $100,000 invested over a lengthy period of time would generate a considerable amount of interest. However, if we only started with $1 million, we would run out of money by year 25 and would be living in poverty for the last 5 years of our retirement. So now that we know what the goal is and how much money we will need in retirement, we can work backward to see how much ETH it would take to retire by 2030. So I've got this spreadsheet here with 4 distinct scenarios: the bear case, the base case, the bull case, and the super bull case, which is pretty interesting. As previously said, we are attempting to raise $1.1 million in Ethereum investment by 2030, and the current market value of Ethereum at the time of this recording is around $320 billion. But this varies frequently. So, starting with the bear case, we will work our way up. With the bear case, I am not taking this from any sort of financial modeling, and I haven't seen anyone imply that it could be this awful. But I have estimated that Ethereum would match the average S&P 500 return, actually slightly below that at 7% per year, in the worst case scenario. Now, I think this is crazy because Ethereum has been gaining traction and growing at a much higher rate than most of the corporations in the S&P 500, but that's beside the point. This is for the worst case situation in 2030, assuming a 7% annual growth rate between now and then. The total market cap for Ethereum would be around $550 billion, and with 120 million ETH outstanding, which is the current figure for today. But that's also another way that it factored in a conservative assumption into this, because Ethereum is turning out to be a deflationary and will likely continue to be increasingly deflationary as time goes on. So if we assume a 0% issuance rate, which means no new Ethereum is created, yet it hasn't declined by 2030, the average price per ETH would be roughly $4,500. If this scenario occurred, the number of ETH tokens required to retire would be 240. For the sake of argument, if you were to buy 240 ETH at today's pricing, it would cost you slightly more than 700,000 US dollars. Obviously, I believe that this is a stupidly low estimate, and I think I would be surprised if it is the price per ETH by 2030. So, let's get started with the base case. The Bankless podcast is now the source for the base case, and Bankless recently had Ryan Ellis on their show, an executive investor in a crypto investment firm. In this video, he goes over a discounted cash flow or DCF model he created for Ethereum. This DCF model is fairly extensive, and it also includes a number of somewhat cautious estimates, but according to it, the fair value per ETH now is between $10,000 and $12,000. And that is the current fair market value as determined by future possible cash flows. So if we push it out to 2030, which is 8 years out, I think Ryan Ellis and the fellas on Bankless would be astonished if that type of situation occurred, because it would be incredibly bearish based on their estimates. However, if we take it as the basic case scenario, Ethereum's market cap in 2030 would be 1.2 trillion, with the same number of ETH outstanding, and the price per ETH would be $10,000. If that happened, you'd only need 110 Ethereum to retire in 2030, which could only cost roughly around $325,000 at today's pricing. What about the bull case though? Because things are about to become interesting. And if Ethereum's market value exceeds $4 trillion in 2030, the price per ETH would be $33,333. In that case, you would only need 33 ETH to retire, which is less than $100,000 at today's pricing. Finally, we have the super bull scenario. Let me caution you that this scenario is absurdly bullish. As a result, this valuation model is based on the ARK Invest Big Ideas 2022 study. Every year, ARK Invest publishes a report in which they discuss the future of creative disruptive technologies, and Ethereum was prominently included this year. So according to Cathie Wood and ARK Invest, Ethereum's market cap might reach $20 trillion by 2030. 20 trillion compared to the present market capitalization of roughly 320 billion. Now, I know that sounds crazy, but he isn't just any random dude. This is a true investing firm, a legitimate hedge fund managed by a legendary investor with some credibility. Now, I'm not saying that I believe this will happen, but even if a fraction of that figure becomes a reality, we are talking about some hefty price per ETH. Anyway, if Ethereum's market value hits $20 trillion by 2030, the price per ETH would be over $160,000, and at that price, you would only need 7 ETH to retire. So these are 4 different scenarios for what Ethereum might be worth in 2030 and how many ETH it would take to retire. I believe the bear and super bull are a little too far to the extremes, but it might end up anywhere in the middle. Now, there are a couple more significant considerations I'd like to mention here that may have an impact on whether or not it is viable to retire of Ethereum. First and foremost, I want to emphasize that I am not proposing that anyone abandon their retirement plans in favor of a single investment, particularly a cryptocurrency, which is notoriously volatile. This is just a thought experiment to explore what it would take, which I thought would be fascinating given all of the highly positive forecasts for what ETH could be in the future. Also, I can already hear people complaining. You didn't account for taxes, capital gain taxes. So, here are a few things to address that. To begin, you may invest in cryptocurrency through a tax-free account, which may be available depending on where you live. Second, you don't have to sell your ETH to cover your expenses, incurring capital gains taxes. For example, you could borrow against the value of your Ethereum and then take that money in stablecoins and live off of that, which would not be taxable income in most jurisdictions because you are taking a loan against an asset. If you still want to figure in taxes, I am not going to do it since there are too many distinct jurisdictions and the tax rates in each and every one of them are different. Finally, the more money you have saved by the time you retire, the better. In some aspects, this was a conservative approach to determining what Ethereum would be worth in 2030 and beyond. But in others, it might not be and it could all go to nothing. So if you're genuinely considering retiring in 2030 or investing in Ethereum, diversification never hurts, and the larger the margin of error that you factor in for your own personal retirement calculations, the better. So that is it for today, everyone. If you found this video helpful, don't forget to give it a like and let us know what you think in the comment section down below. Thank you so much for watching, and until next time.